Looks like ES topped out right at my line, 56.91. So we'll see if this gets rejected, but I would say that given the positioning, it's pretty likely that we pull back overnight a little bit, maybe back towards like 75 or 70, and then that into CPI in the morning. Because some neutral positioning will have to come in. Commodities pretty flat on the day. Oil got a little bump with reserves being lower than expected. Still not in a range where they're really pressuring those short CTAs. But another bump above 83 would get it where it needs to be. Yields pretty flat on the day. I mean, top end of the curve was down a tiny bit, but not very much. And the dollar is still holding 105. CPI will obviously have a big effect on both of those. Correlation on the 1 and 3 month breaking, both of those breaking down quite a bit today after they hit their intraday high earlier this morning. So not a lot of push coming in from Nasdaq here. Most of it in the Russell and Dow supporting the move higher. This is from the contract roll, not from anything else. But forward yield on volatility pushing up today, and that increase in risk premium is what they're shorting, right? So they're still selling a lot of short vol, but because event vol is going up, they're shorting the fuck out of it, right? And then, when event vol goes to fall off, they'll short it even harder. That's one of the reasons VIX is up today. Besides squeezing out the short calls, is that people are pricing up volatility for CPI and PPI. Move probably a little higher today than yesterday, but I mean, not moving around very much recently. A little bit of tail risk exposure fell off last night. Still only 44.33% of the S&P over its 20-day moving average. And even with the bounce in RSP today, it's still bleeding out over the last couple of weeks. So we did get a little breadth on this run, but I mean, we had to have. Correlation between VIX contract in front and cash VIX is still positive 3.43. And Fed fund futures pricing in basically just one rate cut into the end of the year. So not a lot of moves on Fed fund futures. And that's about it. I know Beyond picked up a little bit of a bid at the end of the day. This came off Reg Show yesterday, but I think positionally it still looks bullish and like it's going to run. So I'm not sure that the Reg Show matters there, but it may not have as strong a run because it's off Reg Show. Or it could have a stronger run because maybe they didn't want it on Reg Show. It coming off before the forced settlement period is kind of odd. GME had a little bit of a move up today. It broke higher. There were some short puts pulling back on it yesterday. I'll look tonight and see if more were being sold on this move up, but I don't think so. And as those short puts break down, that's going to open up more downside range. It did fail to break out of Gamma Max. It did see some covering though, and it's possible we see a little bit more. I don't know how much of this is just active fund flows because breadth picked up today, and it caught a bid on the back of the rest of the R1K. Because mid caps did move pretty hard to the upside today, but it definitely doesn't look all that bullish, and I don't think the options chain looks very good either. Upstart's still getting shorted, but moving up. This is getting pretty close to Gamma Max and a break of 25. It actually does get kind of crazy if it breaks 25, but it may not. We'll see if shorting picks up more or it doesn't. Generally, following a bump on the crossover, you start to see it get shorted down a bit harder. So this may just kind of fizzle out and fail at the 25 resistance. Fubo is still getting shorted very, very hard, but to no avail. And the reason for the increased shorting is probably because we're approaching earnings and volatility is going up, and so they're selling the out of that bump in volatility. GoEV climbed up to almost 250 today, or did it actually get to 250? Briefly, 257. Breaking out over that 250 level is going to be pretty important, and this is also still being shorted pretty heavily. But remember that all of these are exposed to that active fund buying, right? And so if indexes are trending, there's going to be even more pressure on their shortfall positions than is simply created from the short puts coming in. And that can lead to, the whole basket kind of squeezing off again across all of the shit tickers, right? Because the pressure just keeps building as people go longer and longer the ETFs that they're in. And it makes it harder and harder to short the underlyings in those ETFs, and you can kind of get like a breakout across all of the shit tickers at once. Anyway, yeah, so that's kind of interesting. That's about it for today. Thanks for tuning in. I'll see you guys tomorrow. I hope everybody has a good night. Later.